Hello, my name is Dan Cass with QSO Financial Services, and myself and my firm have partnered with the Department of Labor to help you navigate your financial benefits and the decisions that you may have with those. So let's go ahead and get started.
The first thing I wanted to do was give you a little bit of information about myself and how to get a hold of me if you have any questions. I've been doing these transition workshops for over 25 years. I've worked with over 150 companies in doing so. And what we found is the important thing is getting as much information as possible before making your decision. We also focus on the area of retirement planning, 401k rollovers, insurance protection, estate planning, transition planning, college funding, and portfolio analysis. My phone number, 303-768-0436, is listed, as well as my email. If you want to get a hold of me to go over things individually, you're more than happy to by phone, email, or we can sit down in person. So what we're going to talk about today is knowing your options during this transition. We're going to talk a little bit about your life insurance options if you have them, and also what to do with your retirement plans, and based on your decision, what type of tax considerations you may have. So let's start with your life insurance. If you have group term life insurance with your current company, you may have the ability to port it, meaning take it with you when you would leave. We'll talk about the differences in different types of life insurance, whether it's term life or permanent life, and then also how much life insurance you may need. So let's talk about portability first. Portability means that with your current life insurance, you may be able to take that life insurance or a portion of it with you when you leave employment. The advantage of doing this is you would not have to be qualified or underwritten when you did so. So for example, let's say that your health is not as good as it was when you first started employment, or it wasn't good, period, and you may find it expensive to be able to get life insurance on the secondary market or the open market. This may be a good advantage for you if you need that life insurance. So the first thing that you want to find out through your benefits department is whether you have portability with your life insurance. The next thing you're going to want to find out is what amount of your life insurance can be ported. Can you port or take with the entire amount or a portion? The second thing that you'd want to find out is what type of life insurance can you port it to? Can you keep it as a term life insurance policy, or will you be able to convert it to a permanent life insurance policy? So let's talk about the difference between those two. Term life means that you have a life insurance policy for a specific period of time or term. Previously, in your employment, that term was the employment itself. Once you left employment, that term ended. There are many other lengths of term. There could be 5-year, 10-year, 15, 20, 30-year terms. And you would have a guaranteed fixed premium or cost of that insurance for that specific time. Once that term is up, however, you would have an option to let that term lapse or potentially be able to convert it to something else or requalify for more insurance for a different or the same type of term. Term life normally has a lower cost out of pocket per month than other types of life insurance. What I would recommend doing is finding out the cost of the ported life insurance term policy and comparing that to other policies in the open marketplace. Another type of life insurance policy is permanent life. That means that the policy is designed to be there for the remainder of your life as long as you are paying the premiums or you have sufficient cash value inside of the policy to cover the cost of insurance. There are many different types of permanent life policies. There is whole life, universal life, variable life, indexed universal life, and many more. I would recommend asking the life insurance company what options are available if you choose to port or have the ability to port it to a permanent life policy. And then find out the cost of that policy as well as the amount of the premium that you would be paying per month. Permanent life insurance policies have a cash value or a savings component within the policy itself. The life insurance may also act as a tax-deferred vehicle, which will allow those savings to grow tax-deferred and sometimes have the ability to pull out those earnings without paying taxes. So find as much about the options that you have before making those decisions, and then compare those options to what you could get in the open marketplace. The third question you're going to want to ask yourself is, how much life insurance do you really need? There are many good calculators online where you can find out how much you need based on what you are trying to protect or who you are trying to protect. You may also call my office and work with me personally to find out whether or not you need this current life insurance or whether you have sufficient in life insurance in other areas. So let's move on to your retirement benefits. In this situation, let's assume that you have a 401k or something similar to a 401k. The first thing you're going to want to find out is, what is your vested balance inside of your 401k? You are entitled to be able to take with you your contributions to your 401k and the vested balance of the employer's contributions. Your company might have a certain vesting schedule, meaning a certain amount of time that you would have to be employed to have a vested interest in their contributions. You will normally be able to find this vested balance on your most recent statement. If you do not see it on your most recent statement, I would recommend calling your current 401k custodian, and they will be able to tell you. We'll also be talking about what happens once you know where you want to go with it. If you need to spend it, what are the tax consequences? Are you able to keep it or leave it with your current employer? And if you do want to move it or roll it out of your current plan, where can you go with it? An IRA, another 401k, another retirement plan? That's what we'll be talking about next. If you have pre-tax dollars inside of your 401k and you need to take that money out, you may have tax consequences. That's going to depend on a number of different things and what you may be spending it on. But generally, you will be taxed at an ordinary income tax rate. That money that you spend will be added to your ordinary income, and then based on your current income and how you are doing your taxes, that would determine your tax rate. If you are under 59.5, you may incur an additional 10% tax penalty. So for an example, if you are in a 20% tax bracket and you need to take money out and spend it, that money would be taxed at not only 20%, but an additional 10% or 30% on that distribution. There are a few different ways that you could avoid that 10% tax penalty. There is something called an indirect rollover or a 60-day rollover. What that means is, if you take possession of that distribution, let's say you put it into your checking account, and if you do not need all of that or change your mind, you have the ability to put that money back into a qualified plan or a portion of it within 60 days and not have your 10% tax penalty. There also is a rule called 72T, which stands for the code in the IRS that it is under, and that allows you to take substantially equal periodic payments or take that distribution over a longer period of time, and that may avoid that 10% tax penalty as well. If you need more information on the indirect rollover or 72T, feel free to give me a call or email me and we can review that in more detail. If you do not need to spend it and may want to keep it inside of your retirement plan, you may be able to keep it with your current employer. You would want to ask your benefits department or your current 401k's custodian whether you'd be able to keep that 401k inside the current plan. You then may have access to the same website you've been using, the same statements, and the same service. Let's say, though, you do not want to keep it with your current company. Where could you move it, or where could you roll it? You may be able to roll it over to another 401k. For example, let's say your new employer has a 401k. Can you move that money from your old 401k to your new 401k? The IRS does allow that. However, you want to find out whether your new 401k allows incoming rollovers. If they do, there would be paperwork involved to move your old 401k to your new 401k without any taxable consequences. You may also be able to move or roll over your current 401k to an individual retirement account or an IRA. If you have an existing IRA or would like to open up a new IRA, the IRS allows you to roll over those pre-tax dollars into a traditional IRA. If you have Roth IRA contributions or 401k contributions, you could then roll those portions into a Roth IRA without it being a taxable event. If you want more information on your options, you can contact your current custodian or 401k company, your current financial advisor, or you can contact our company and myself, and we'd be able to give you options as well. You may be able to roll over your current 401k into another type of retirement plan. Let's say you get employed with a company that does not have a 401k, but they have a retirement plan that's called something different. It might be a 403b, a 501c. Maybe they're just calling it their qualified retirement plan or their profit sharing plan. You may be able to roll over your current 401k into that plan. We'd want to make sure that one, the IRS does allow it, and two, and most importantly, that new plan allows incoming rollovers. So please contact your current 401k custodian and your new employer's retirement plan custodian to get that information before requesting any type of rollover or distribution. Once you have that information, you can then get the distribution paperwork or go online or go on the phone to help get that initiated and moved over to another type of plan. If you would like help from my office or myself with any of this, feel free again to either email, call, or we can sit down on a one-on-one appointment. I know we've gone over a lot of information today, but the key is getting as much information as possible as you can before making a decision.
I hope this information has been helpful today. Please feel free to contact me or my firm with any questions that you have, or if you need help initiating or navigating the process.